Hello and welcome to News Express, exclusively brought to you by Business AM, Nigeria's fastest growing financial and business newspaper. I am Chukunonso Modi. Now let's take a look at the stories hitting the front page this week. Now the big story, inflation upswing could drive CBN's MPC Hawkish to tweak rates. Sub-headline, analyst sentiments lean towards impending rates hike from Fed, major CBS, asset purchase tapering. Now another story, equity investors put 2.62 trillion naira market valuation on Nigeria's top lenders. Now you should also check out finance and investment with FSDH sees global equities gloom, transport business, Nigerians buying more vehicles, commodities and agriculture, rice pyramids not yet enough, executive knowledge series with businesses, customers should negotiate prices, and of course project syndicate with why did almost nobody see inflation coming. Now let's bring in Philip Isakba, the publisher Business AM, to help us make sense of the headlines. Good morning, Philip.
Yeah, good morning, Nonso. Good to be back. How are you?
I'm fine. How are you too?
I'm good.
Okay, so let's quickly go into the first story, which says inflation upswing could drive CBN's MPC Hawkish to tweak rates. Now, this story started with a question that I would like you to answer, which is, has December inflation upswing presented a headroom for the Central Bank of Nigeria's Monetary Policy Committee to maneuver on rates? Because there word on the street that there is a strong possibility that a rate tightening measure could be something CBN will pull out tomorrow at the conclusion of the MPC meeting for the new year. Do you agree with this?
We have what dates back to, May 2020, when the central bank, through the MPC, unanimously voted to tweak policy rates. That's what they did way back in May 2020, and you could understand that because that was at the height of the coronavirus pandemic, the lockdowns and all the rest. So global economy, all was down. Nigeria was suffering quite a lot at the time. Oil was not moving in the market. The prices were as low as $20, or nobody was even wanted to buy. So that's how far back they go in terms of rate tweaking. They have been comfortable, keeping it dovish, and that's what we have seen, since 2020. Now what's going on here now is that inflation has, we've had a series of inflation, what you call, although there was inflation, but it was receding, there was, was receding. And, but suddenly, boom, we have inflation rising again, let's be clear about this. Inflation is high, yes. But at some point, for many months, it was climbing down. But it has changed direction. It is now moving up, and analysts that we've spoken to throughout last week and have looked at this and said, well, if the central bank MPC had always thought about doing something about rates, they didn't have the opportunity. There was no headroom to do. We followed this for quite a while. There were times when there was no headroom at all. You move this way, the indicators were terrible. You move that way, the indicators were telling you can't do anything about it. Even though if the members wanted to say, oh, let's give it a bit of a tweak. So we have a situation now. Inflation has December inflation came out and it said, well, direction has changed. So analysts are looking at it and saying, this offers a headroom for members of the committee to say, let's give it a little bit of a tweak. But that's not just it. Globally, major central banks all over the world are beginning to do something about rates. The Bank of England did something already, moved rates by some basis points to 0.225 or so percent just last week or thereabout, sorry, last month or so. So they have decided, the Fed, people are looking up to the Fed. Fed has already, the U.S. Central Bank, the Federal Reserve, they've come up to say that, well, we're going to do something about rates this year. With the easing that we have always followed will change costs this year. So they've outlined certain things that they will do, which also suggests that globally, the thinking is beginning to shift, so all those accommodative policies, are going to be allowed to ease off a little bit, and we're thinking that the central bank might do the same thing. They are meeting today, they're meeting tomorrow. Mm-hmm. We are saying that when it's all over tomorrow, there's going to be some changes, to be expected. If they do not, then that will be the surprise, really. Not the expected outcome of the meeting.
Mm-hmm.
So every most analysts we've spoken to, whether the one that have houses, or the one that are working individually, are thinking that rates are going to. The CBN MPC is going to do something with the rates, and we think they're going to go hawkish, and then and tweak the rates a little bit, and that's to be expected. It's an election year, though. When it's election year, election is next year, February or March. Mm-hmm. But this year is the year when activities, will whatever the politicians will do, mm-hmm. will generally affect the economy in terms of how money will come out. Whether you talk about money in terms of naira or you talk about money in terms of dollars, you have a lot of stuff going on this year, and then there's a lot for the both monetary and fiscal authorities to do with regards to looking after the economy, and that's we're expecting some form of action from the MPC when they finish their meeting tomorrow.
Okay, all right. Now, the MPC meetings have become they've become the highlight, ever since May 2020, that they pulled that surprise on us, unanimously tweaking policy rates. And they have this thing for keeping analysts and stakeholders on their toes, guessing what would be their next move. Now, if the CBN should adopt a stance that analysts say it might do, what would be the implication for the market?
Well, you expect a lot of reaction. There's a discussion we'll be having for quite some time with people. You can look at the the money market, yes. Reacting in terms of rates, mm-hmm. whether treasury bills, whether especially the fixed income market will react. We expect that the central bank, the MPC, have been accommodative in the sense that they think the economy needed some support, especially with the real sector needing to be steady in terms of how what you call money is available to it, to boost economic activities, so that the whole economy can be up and running, But when rates go up, then a lot of things will definitely go up. The interest rates will go up. But it might be good for the fixed income market, because people have spoken about that market not being what's called interesting for them to put their money in. So you'll expect that if that happens, you perhaps a movement from the capital market to the money market in terms of investors trading or investors' interest, and then we also have the big issue of how those policies affect the capital market as well, because we've been speaking to some operators in the capital market who've said that they don't have a member. There's no core capital market member representing the capital market in the Monetary Policy Committee, and they've been talking about that whatever decisions you take, tend to have an effect on the capital market, but there isn't a representative at the MPC, looking after the interest of the market. So there might be some effect on the capital market, when that happens, but overall, it's something that businesses will have to respond to in terms of adjusting. Should the rates move up? Tomorrow. And then see how things go from there. But we expect that the hawkishness of the MPC, if they choose to go that route, will not be such that it will still be steady. It will not be something that will be out straight, out of the blue.
Okay. Now, analysts are also noting that across the sub-Saharan Africa region, heightened inflationary pressures could first force most central banks in Africa to also adopt a contractionary monetary policy. What do you think?
Exactly. It's a global picture for 2022. What it is. I think there's been some positive reaction. Positive in the sense that people are saying that we understand this now. As I'm talking in terms of the pandemic. It seems that the reaction is that we've been through this now since 2020 or 2019 for China. 2020 globally. And there seems to be some kind of understanding. About where this is taking us to, and they are responding in such a way that suggests that we should be calm. So you will expect that having that understanding, and seeing inflation, there's an article you see, of course, Project Syndicate article. Why did almost nobody see inflation coming? And
yes.
That's and that's the sing song globally. It's not just in Nigeria. We've been in Nigeria. We've seen it in December. We called it. We link it to festive activities, but it's much more than that. Because globally, inflation has been a subject matter for economists and analysts, whether in the US, in the UK, and that's why the UK made a quickly adjusted rates recently. So the point is that across Africa too, inflation is an issue, and they of course they will respond, because most central banks, see inflation as a key thing to deal with. Never mind that the Central Bank of Nigeria, it doesn't seem to place it in a high pedestal as a core target. They put plus or minus, put a what's it called, a band that they want to achieve and never get to achieve it, because we are well above the single digit rate that they have promised to achieve for the past 6 or 7 years. So that's the key thing. So across Africa, you will find that happening. What's called the managers of the economists who are watching inflation, and then you will want to rein in inflation if you're leading a central bank, and that's what you're likely to see. That they want to follow a contractionary policy, to see that inflation is brought under control, because it's a global problem now. People are beginning. They're talking about it. They've been talking about it for maybe in the past 2 months or so.
Yes.
But it's something that they worry about, and they are likely to respond to.
All right, so let's wait for tomorrow, and we'll know what the final decision is from the CBN. Now, moving to the second story, equity investors put 2.62 trillion naira market valuation on Nigeria's top lenders. Ahead of the earnings season, which draws closer, which has seen Tier 1 categories of listed banks eager to release their full financial year 2021 earnings, equity investors have placed a market valuation of 2.62 trillion naira on Nigeria's Tier 1 capital banks, which account for about 10% of total market capitalization of the Nigerian stock market. Now, can you give us a breakdown of valuation analysis? Who is leading the round?
Yeah, Zenith Bank obviously tops that. We've steadily gone one by one. These are the Fuga banks that analysts always focus on. These are the the banking sector has always been in some sense the attraction at the market. So Dangote is big, MCN is big. We just saw Bua Foods come in. So but the key thing is that the banking sector has always drawn attraction, not necessarily because of the earnings, but just because they make a lot of money. You see banks in the category making 100 billion, 100 billion naira in terms of earnings or more, but the core thing is that as we get to the earnings season, which should begin to roll out anytime from now, was investors take position. They've been taking position since December, ahead of the end of year result that will likely come out anytime from now. So now you have investors looking at what's called the valuation of these banks, and they've come up with what you call what they calculated at 2.62 trillion as market valuation for these banks, and that's a huge amount, for just the banking sector, but not just the banking sector, but just the top lenders. There are other banks. There are other banks quoted on the stock exchange, but we're saying that the top lenders, who are particularly the Fuga banks, have a market valuation that is 10% of the total valuation of the entire stock market of Nigeria. So what do you have? You have a Zenith Bank, the most valuable tier 1 lender in Nigeria. With such a huge valuation, they put in as at the time we did the calculation, 25.85 what's called naira per share. Valuation put at 811.6 billion naira. That's quite a huge chunk, of even the entire stuff that we have, and that's for 31.4 billion outstanding shares, that haven't come onto the market. So you have quite a lot going on for Zenith. We used to look at JITCO, Guarantee Trust Bank, sitting pretty in that position some time ago, but that appears to have changed, with this what we have discovered with this story. So you have I think up next will be JITCO. FBN Holdings, the giant. Sorry, no, you have a Guarantee Trust before FBN. Guarantee Trust is valued at 750.50 billion. Last Thursday. As at last Thursday. And you have it has astounding. We are talking about our astounding 29.431 billion shares. At 25 naira 50 kobo. For the shares. So they have quite a lot of outstanding shares, that have not come onto the market. That's what we're saying, So when with those shares you come onto the market, we're talking about 2.62 trillion naira, that is available, that these banks are actually worth. You have FBN Holdings, which created some bow some time ago, in terms of the billionaire Femi Otedela, taking interest in the bank. That created some ripple effect, only recently, towards the end of last year. And it's worth 430.74 billion. Outstanding shares, we are looking at 35.895 billion outstanding shares. So there's still, at the price of 12 naira, there's still a lot of shares out there, that can be put in the market, and then you have a lot of things going down there. Then you have Access Bank. There's something interesting about Access Bank. It's the biggest, in terms of I think what total assets. Total assets are valued at is 348.34 billion. That's what it is, And then Access Bank is one that has been bullish in terms of looking all over the world, particularly Africa, trying to expand its frontiers. And then you have UB United Bank for Africa, on the list as well, making up the Fuga banks, that we have in Nigeria. UBA is currently valued at 280.435 billion, on its outstanding 34.199 billion shares, by last Thursday it was doing 8.2 naira 20 kobo, So interestingly is that these valuations are based on the outstanding shares, that is shares that are still available, that can come onto the market, and cause a storm, or cause some significant changes in the market, But I guess they play their cards well to ensure that the prices don't just drop drastically.
All right. This will definitely be a big boost for the market. Okay, thank you, Mr. Philip. We'll see how the stories develop this week.
Yeah, thank you very much, Nonso. Have a great week.
You too. That was Philip Isakwa, the publisher of Business AM, Nigeria's fastest growing financial and business newspaper. That's all for now. Stay tuned for more.